Morning, guys.
Hi, Scott. How are you?
Bit dopey this morning, actually. I slept in for, haven't had a sleep in a while. And didn't get up till 20 past 6, which for me is like hours past when I usually wake up, which has been fantastic.
It's funny how it does make you a bit dopey, though, doesn't it? When you
just not 100% at my best. But before we started today, I wanted to go through. I traded the first sort of hour and a bit with this podcaster guy Etienne who came over yesterday, and it was super interesting. So if people have the time, I want to go through it.
Yes, fine.
You guys are okay with that?
Yeah, definitely.
All right. Let me take us back to the start of the day. Because it was super frustrating for me because I was here with this guy and I taught him the system, and we were like, okay, let's sit down and trade, and I showed him how to use Ninja, and he's like, okay, let's get after it. And then an hour later, we still hadn't taken a trade. So it was anyway. Let's get at it. So at the start of the day, we're trending up. Were we in decreasing vola? At some point, so we need to check if we're in decreasing vola when we start. So we're not in decreasing vola here. This is the highest close in the trend, highest close in the trend uptick, highest close in the trend uptick, highest close in the trend uptick. The close is 564, equal close, 565, highest close in the trend, down tick, pops us out of decreasing vola here. So we're out of decreasing vola. This is the highest close in the trend, highest close in the trend. Here, okay, we have touch the upper Bollinger, lower close, higher close, obviously not high and tight. And we have a touch of the lower Bollinger, higher close, lower close. And this one, the entry is 56.5 and the stop loss is 52. So that's 4.5 for 5 is 61.5. And the high here is only 60.7. So this one wasn't high and tight either. And this one looked like it was becoming high and tight, lowest low in 25 bars, became here, still not high and tight by here. So there was no trade here. Then not high and tight as a long trade. Touch of the, and then here, touch of the Bollinger, lower close, higher close. And where were we? There was no confirming evidence on the 10. So here, no confirming evidence on the 10. Trending up here in decreasing vola, immediately popped out of decreasing vola. This trade, touch of the Bollinger, lower close, higher close. With the we popped out of decreasing vola by then, but this was not high and tight. The target was down here, couldn't take it. Then we have this one, way too wide, definitely not high and tight. Touch the upper Bollinger, not trending, highest close in the trend on an uptick. And then we had touch of the Bollinger, lower close, higher close. This one was high and tight. Yes, it was. Yeah. So the stop loss here is 66, and it got stopped out here. So that was a loser. And then touch of the Bollinger, higher close. This one was not high and tight there. We have to check again. Was this high and tight? It was 58.5 and 55 is 3.5 for 4. That's 62.5. 62.5 and 56.5. is 6 for 6.5. $69, and this one wasn't high and tight from memory. So this one was not high and tight. So I couldn't take this. And then touch the upper Bollinger, not trending yet, trending. Touch the upper Bollinger, lower close, highest close in the trend in decreasing vol. I can't take this. Hammer candle, no entry. Place both those orders. It was walking up the Bollinger on the 10 and trending on the 5. Looked like it was going to touch the lower Bollinger and paint a really nice setup here, but this one didn't touch the lower Bollinger. 611 and the low was 613. Super annoying.
Scott, it's Anthony here. Can I just jump in there on that one? Those little setups there.
Yeah.
So we were in decreasing vola. So at 432, there's an ATR reading, because I was going to ask you about this during the day. So as you're going through it, the ATR at my end was 3420 at 432, right?
Mm-hmm.
And then 2 bars later at 436, it's also 3420.
Okay.
So that means that's not, the 432 is not a pivot too high, because that's an equal, not a lower, right?
Correct.
So that means that when you get to this, you get a shooting star, a hammer candle at, well, you get a sequence of them. The 452 produces an entry.
Yep. We were already out of decreasing vol by then.
Well, I wasn't trading. I did the baseline this morning. That's an intriguing one.
I made a mistake. Yeah, I thought we were out of. I thought we were out of decreasing vol that night. I made a mistake.
It's really technical because they're identical readings. You know, like it's to get that on an ATR is pretty freaky. But and I don't know if I need. I've got, I think, 7 decimal places on my ATR, so you don't want to. Well, I mean, you could go further.
They look equal to me, and so therefore you are correct. This is not a pivot too high, which I thought it was. I thought we were out of decreasing vol here into decreasing vol there. So I'm wrong.
It's a shame because the hammer is a losing trade, but by the rules that if you're still in decreasing vol, you can't take the RTV that follows, which is a winner.
There's a hammer at 442 you could have taken, which I took.
Holy shit! You are absolutely right, Stephen. Okay, so and this is a 2R winner too.
It was a nice one.
Damn. Okay, so this is incompetent trading on my behalf. I missed this one. I placed this one, but it didn't get a fill. This is 705 and it only got to 707. Placed it again here, 702, got to 704. So no fill there, fill here and losing trade, which I thought was really technical. And then a winning trade here. Actually, the entry was here. So here we have touch of the ball out of decreasing vola with the loser. Touch of the Bollinger, lower close, higher close. It was high and tight here. Painted a winner, 1.1R. And then we have a trending, I think it was from memory here. Painted a 2R. So to me, that was just a very, very difficult period of price action. Lots of super technical stuff. Yeah, I missed that one. So there was a 2R winner here, a 1R loser here, a 1R winner here, a 2R winner here, all within the space of, including the skip between 412 and yeah, in an hour there was a hell of a lot of action.
The short though at the 5 o'clock area, technically you're still in DV, aren't you?
No, you pop out of it here, right? I think. Oh, I thought we popped out of it here. Damn. Okay, so we didn't pop out of it. Yeah, no. You, let's look. 1, 2. No, we're out of it here.
Okay. Yeah. Because we're
At
trending
least
up.
I only
Right?
made one mistake, didn't make 2. Fuck. Yeah. So this is a pivot too high. 1, 2, 1, 2. Pops out here. It was high and tight here. The target was about here, I think, from memory. Didn't need to wait for it to get to here. Hit the target, reversed, Bollinger trending. One arm who stopped to break even too hard, hit it in this bar.
Yeah. Got it. Sorry, mate.
Yeah, and then I was pretty done for the day after that. Yeah. Okay, sorry about that. I just wanted to go through it and get it straight in my mind too. So because it was it was really quite difficult for me. Who wants to go first?
It's Ben here. I might as well kick off as a segue to just what you were discussing.
Please, Ben.
Yeah, good morning, guys.
was your
Yes. Sorry, mate.
How was your week?
Yeah, not too bad. Pretty busy, man. Too many late nights and a bit groggy looking at markets. But yeah. So you're mentioning some hammer candles there. I thought for the hammer and shooting star trades, they need to be the charts needed to be trending.
No, we started out like that, and then after we'd got about 500 trades in, I think we realized we could safely take out that rule, and there was only like 3 trades affected. So the idea of system building is anytime you can take a rule out safely, it makes your system better. So anytime you can take a rule out without materially affecting the results over time, you should do that. And yeah, as a general principle, simplicity is robustness. So we took out a bunch of stuff that wasn't moving the needle.
Okay, so that where you had that rule of hammer or shooting stars appear at the touch of the 8 EMA or 21 EMA or below, that is now irrelevant.
No, it has to touch the 8 or 21 EMA, but there's nothing in it saying that they have to be trending as well.
Okay, because on this chart where you're pointing your finger, it's sort of 2-minute touches the lower Bollinger Band, and it's high close, lower close, high close, lower close.
This one
within those 8 to 21 moving averages. So
does it. The rule is read literally. So the literal rule is it touching the 8 or 21 EMA or both? And yes, it is. Doesn't say anything about it being trending. It just says, is it touching the 8 or 21 EMA? And it is.
On one of the videos I was looking at, maybe that was prior.
Yeah, I might have accidentally left an old one in there. If you see that stuff, can you just shoot me an email? Because because I thought I got all of that out, but maybe I didn't.
Well, I think because the outline of the videos is that you got your last video on that prison breakout thing of where you've got an update to the system, but yeah.
Okay, I probably need to make that more clear.
Because on it you've got the hammers and shooting stars can appear above or below the 8 EMA or 21 EMA, as long as you were still trending at that time, I believe. But
no, I never said that. No.
Okay.
No,
So it always has to be touching.
Touching.
Okay.
And there's a couple of weird situations you'll get where like the market has started trending down, but it still touches randomly, and it's worth like just putting up with the bullshit there. Just to have one less rule is actually a big deal for system performance. Like every rule makes your system more fragile. So anytime you can take one out is a win.
And for those particular trades, they're only valid for 1 bar only. Is that correct?
No. So they're valid. The rule is we look at our entry point. So here, the entry point, the high is 70.5, the entry point is 71. When we go to the next bar, if we can leave the entry point on our order the same. So here, well, this one was an entry, and it was a loser. But for example, here, if the entry point, if the nearest half pip or full pip above the candle high is the same in the next candle as the previous candle, you leave the order on. Otherwise you. So if we weren't already in a trade, you imagine we got this hammer candle here. So the high is 70.2. So the entry point is 70.5. So the high here is 70.4. The entry point is still 70.5. So as long as it's like that, you leave the order on. As soon as you have to move the order down, you kill the order. And the rationale behind that is it's inherently stinky for it not to break. Like if you see a hammer candle, it should break the high of it. Anytime that it's not breaking the high of it, it's inherently stinky. Like this is actually like a little bit stinky. When we have enough data, I'd like to revisit that rule and see if it changed the edge. But you know, when you see a hammer candle, it should be breaking up to the highs. Anytime it doesn't, like here, it didn't break above. It's kind of stinky. You know, we got a bit more of a substantial pullback.
Okay, so the order remains in place as long as the wick is an equal high. But then if you start getting lower candles,
as long as the nearest half pip or full pip above the previous candle and the current candle are the same, which is different because here the high is 70.2 and here the high is 70.4. So they're different, but the nearest half pip or full pip above both of them is the same.
so you're looking for that minor. So as long as you don't have gaps to the downside, the order's still valid.
Exactly. So as long, the way that I think about it in my head is as long as you don't have to adjust the order. If you can leave your order on and like keep your hands off the steering wheel, like you're good.
With decreasing volatility.
Mm-hmm. Let's find some decreasing volatility. Yep. Good questions, by the way.
Is that you always have to have decreasing volatility in the 5 and the 10? Or is it just one of the confirmations, or is it always?
Okay, so we have 4 different. So decreasing volatility on the 2 and decreasing volatility on the 5 and 10 are totally different things. So on the 5 and the 10, they're just another one of the confirming evidence types. So if you look at the results, they hardly ever happen on the 5 and the 10. So they should be the last thing you check for. It should be just like, first of all, check the Bollinger. Second of all, check the trending. Third, are we walking? And then just a last check before you say, no, there's no confirming evidence, check for decreasing volatility. But decreasing volatility on the 5 and the 10 is really, really quite rare. On the 2-minute, it's not rare at all. On the 2-minute, it's something you have to stay on top of all the time.
And on the 2, it's always required for a trend trade.
Always. And it's not required at all on the 5 or the 10. So you can be decreasing volatility on the 2 and not decreasing volatility on the 5, not decreasing volatility on the 10. Still have a perfectly good trade.
And if we're not trending, do we ignore ATR?
Let me think about that. If you're not trending and you're not in decreasing volatility mode, you ignore ATR. So the technical thing here is you can't be in decreasing volatility mode unless you're trending. But once you're in decreasing volatility mode, you stay in decreasing vol even if you stop trending. So technically, you could have a situation where you start trending, start in decreasing volatility mode, stop trending, and then ATR is still relevant even though you're not trending. But that's the only time. I think any of the more experienced guys want to chime in on that? I think that's right.
Yeah, I agree with that, Scott.
Yeah.
Although it gets difficult once it does that.
It gets technical once it does that. It gets cunty. I'm not saying it doesn't.
For the retest concept, you need at least 2 bullish bars. Is that right?
Okay, so it needs to be 2 bars minimum. So here's a bearish one. So here and here. The thing that you nearly always need to check with a retest concept is it's very possible that the last close throws you into decreasing vol. It didn't here, but if this was a higher close, it almost certainly would have thrown you into decreasing vol. So one thing I want to make sure of when you're doing retest concepts, you absolutely check if you're in decreasing vol. Like for example, right here, we touch the lower Bollinger, we start trending, but we go into decreasing vola, and then we have touched the lower Bollinger retest concept, but we were already in decreasing vola. This is extremely, extremely common.
Yeah, copy that. And in terms of the number of bars for a trigger trade on that one?
5 max. It really, in a practical sense, okay, let's say we didn't get an entry there, you nearly always get a retest variation afterwards. In fact, the retest variation can be 20 bars, but the retest variation is far more common than the retest concept. So in a practical sense, you don't have to worry about it too much. It's something I've never ever seen become an issue.
If you get a hammer straight up on touch of the Bollinger?
No, that's not a setup. Unless you're in decreasing vola and it happens if we were in decreasing vola and this touched the EMAs like this and it touched the lower Bollinger, that would be a setup. And Stephen noticed the one that I missed before, which was this one. If this touched the lower Bollinger, which it could have, like the Bollinger was pinching, that could easily have been a setup that touched the lower Bollinger. Now, an interesting situation comes up. If this touches the lower Bollinger, we have both higher close, lower close, and a retest concept, and just a straight up hammer setup. Which one do you think we take? That's a definite corner case.
I prefer the retest concept. Gives me a little bit more wiggle room on the stock.
Exactly so. That's the way I feel about it too. And there's no clear answer from the rules, but personally, if I have an opportunity to use a wider stop, I'll use a wider stop.
So it's always 2 bars though, right? Minimum.
Always.
So the RTC, yeah.
Yeah.
I think that's all for me for now. Cheers.
Awesome, Ben. Good questions, man. Who wants to go next? Stephen?
No problem, Scott. Yeah, interesting week. I mean, once again, my issue is just trying to find, time to do a reasonable amount of trading. At the moment, I'm only managing about 3 hours a night from 6 o'clock, although I think next week I'm just going to miss the first hour and start from London Open. That first hour just frustrates the hell out of me.
I'm exactly with you, man. I'd like to cut it out, but I'd have some splaining to do about cutting it out.
Yeah, well, it means I can get my head down for an hour or so before I start trading, get a bit of rest.
Mm-hmm.
For the week, I actually made 2 mistakes, which I'm really sort of pissed off about. First one,
and have a look at them.
They're not exciting stuff.
It's okay. It's mistakes are a great opportunity to make sure you don't make that mistake again.
Can you see anything? No.
Yeah. You sure?
Okay, so the mistake. Just take that out of the way. The mistake there was wasn't high and tight when I took the 2R, and I think we discussed that maybe Tuesday night. But it was just there was a misinterpretation of the rule. I took it and it actually failed anyway. Yeah.
Okay, so it made no difference to the result, and it's important when we see a mistake to go back to the cause of it. So the cause was just a misinterpretation of the rules, something you didn't know, right?
Yeah, I think Yeah, some I didn't know. So prior to that, I was taking 2Rs. If it's a trend, and it's set up, I just took it as a 2R.
Okay.
Then after that discussion, I had big high and tight, so modified that.
Okay, so from my point of view, if I think about the seriousness of mistakes, and is about how likely you are, how possible it is that you can make that same mistake again. And knowing you, I don't think it's possible for you to make that same mistake again. I think once you know it, right?
Yep. Yeah, pretty confident that one.
So to me, that mistake is a non-event because, okay, you've made it once and you'll never make it ever again. So you paid $103.86, and in return for that $183, you get to never make that mistake again. That seems like a fair trade.
Yep. The next one down here that I don't know what I was thinking when I did that one. It was the decreasing volatility. It's a shooting star, and it was well past the. Yeah,
okay. So that one we probably need to dig in a little bit more. So it could be a couple of things, right? It could be fatigue. It could be emotionally clocked off. It could be that you'd already made a mistake recently and you're trying to make it back. It could be that you had a frustrating period with like not taking trades and you were desperate to take a trade subconsciously. Like I think it's important to kind of dig in and go, what was going through your head at that stage?
Yeah, I'm not sure because it was on Thursday. It was a pretty busy session, so there's quite a few trades through the session.
So this was at 7:42. So this is at the end of your session, right?
Yeah. So I think it's probably getting fatigued.
I think so. And if I'm looking at your results there, yeah, that's a pretty busy day. And that hour before that was like 18:16, 18:30, 18:44.
Yeah, it was pretty full on there.
Yeah, it's on. I think we'd call that a mistake of fatigue, right?
Yep.
So the next question is we don't just say, oh, okay, I was tired, fuck it. How do we make less mistakes of fatigue is a really important and interesting thing. What causes mistakes of fatigue is generally overusing our attention early in the day. So almost always when I make mistakes of fatigue, if I look back on my previous trades in that day, there'll be a trade that I've got in and I really wanted it to work and it didn't, and it sapped my emotions that way, or I just watched every tick of it and like, come on, fucking work, come on. Anytime I do that stuff, I'm in big danger of fatigue later on in the day. And for me personally, I find the days that I trade on Zoom with you guys, I find that's a big danger. I find that once I get in a trade, I just clock off and go for a walk. Like once I'm in, go pat my cat, like see my daughter, and then come back 10 minutes later and see what happened. But with you guys on, I have a tendency to like over concentrate, and it saps the amount of time that I can trade for later on, and I find myself in fatigue danger later on.
Well, the trade before it was a 2R trade, and I tend to watch those because of having to move to break even, and it took a bit of time.
Okay, do you have because I do the 1R move to break even stuff automatically. Do you have
I'm trading MT5, so I need to find a EA that does it for me.
Yeah, I think that's probably finding an EA that can do that is probably worthwhile. I think Chris has one. I'm not 100% sure.
Well, I need to check that out because I was just totally focused on the trade. It was one of those ones that sort of went up, went down, went up. Yeah.
So when we dig in to a mistake, the cause is always there if we have the courage to look for it. And you know, that's an easy fix, right? Okay, set my concentration too much. Let's find that EA, and I think you'll never make that mistake again. That's a more difficult mistake. That's a more difficult mistake not to make again. But you know, if you gloss over it, you're certainly going to make it again. But if you dig in a little bit and go, okay, now I know the danger of that. Like next time it happens, it's like, hang on, this thing cost me a mistake before. like it's actually serious business. I can't fuck around with it.
Well, I'll definitely look for the EA. The other one wasn't a mistake. It was just I made a note that because I had a bit of a brain fade on confirming evidence. So it was the 10-minute was walking the Bollinger at the time.
Mm-hmm.
When I took the trade, the 10-minute, the candle that I was looking at on 10-minute looked like it was going to drop out of the walk. But the confirming evidence was actually the candle before. But for some reason in my mind, I was just struggling with it.
Okay, so for the guys who are newer, what Stephen's talking about is a situation inherent to Bollinger Walk. So Bollinger Walk starts at the first candle that closes outside the Bollinger. So when you look at it when you're doing baselines of trading, this bar starts at 410, doesn't close until 420. So we don't start walking until 420, and we don't stop until we get the close of a candle with a lower high than the Bollinger. Equal high is okay. So here we have the upper Bollinger.
We're not looking at your screen, bud.
I'm sorry.
I'll stop sharing. Stop. Hang on a sec.
Sorry, guys. Okay. So let's consider this bar. Starts at 410. At 420 on the close of this bar, we start walking. We stop walking when we have the close of a candle that has a lower high than the Bollinger. So the high here is 688 and the Bollinger is 687. So we're still walking up the Bollinger for the whole of this candle, and this candle that looks like we're not walking up the Bollinger, we are still walking up the Bollinger until the close of this candle. So this candle starts at 420 until it closes at 430. Now, this becomes an issue not on the 10-minute chart, but on the 5-minute chart. It becomes cunty in one particular situation. If you think about it, it's possible to have a bar start at 24 past 24, 34, 44 and end at 46 on the 2-minute chart, right? While that 2-minute bar is forming, it's possible to have the 5-minute bar end and toss you out of decreasing vola during the 2-minute setup candle. So that's the only like really technical fuckery type thing that can happen there.
Yep. As I said, mine was just a total brain fade at the time.
That sounds like a mistake of fatigue to me, man.
Well, I actually took the trade. I mean, I did take the trade because I knew I was right, but for some reason my brain just started screwing around with me. So I made a note of it.
Yeah, good to make notes. Yeah, I can't see that happening again.
Well, that's probably about it, Scott. Other than I said, I'm going to start trading from the London Open, and still probably 3 hours a day, but I want to try and start pushing it out a bit. But just find the time at the end of the day.
So things that I've been able to do that push out my potential time are being very rigorous with taking breaks. If I take a break, even for 2 minutes after 50 minutes sitting in the chair, and I go and stretch, I just do some, like, I touch my toes a few times and stretch out my back and grab a drink of water and take a piss, and like even a couple of minutes of that, I come back, I feel like I've got juice in the tank. If I don't do that, if I wind it out to like an hour and a half, 2 hours, then by the time it gets to 3 hours, then I have to stop. If I take more frequent breaks, I can do 5 or 6 hours, no trouble. But I have to be diligent.
Yeah, I'm probably making a mistake of trying to do the whole session in one hit.
Yeah, I wouldn't think that was actually possible, man. So for me anyway, it's not possible.
Well, that's about it for me, Scott.
Excellent, Stephen. Good questions, man.
Thank you.
Who wants to go next?
Hi, Scott. It's Julian.
Hey, Julian.
So this week I've been testing a couple of different brokers and their demo platforms, and I was trading with the first one on Tuesday, and So
you're aware that demo platforms are weird, right? Like
yeah,
inherently weird.
Yeah, basically, I was looking at the demo platform because I need to be comfortable with the platform. So before I sort of deposited money, I thought I got it. Anyway, the first one I looked at was LMAX Global, and I didn't really get on with it at all. It was not at all like TradingView. And
is there any way to plug these trading platforms? Most of the bigger ones you can plug into something else, like an e-signal, like a Pro Real Time, like a Ninja, like something like that.
yeah, I think there's. I was just basically playing around with it in the first place, and it took me. It stopped me out like 0.7 on the spread. And that just spun my head, really.
Okay, so this is inherent to demo trading platforms. They all stop you out on the spread, so it's super weird. Like they're not. That's not the way their real shit will work.
So I tried ICM, and that was a lot better. And I think it's the one Chris uses. It's and Steve. It's raw spread, so 0.1,
Wow.
and actually, I really like the platform, CTrader. And
CTrader, cool. I use CTrader in futures like back in the day. It's a good bit of software.
It was fine, and I've made money with the platform. But the thing is, the demo is, like you say, it's not the real thing, and
it's a work of fiction.
So I really wanted to, and I've sort of deposited funds, and I want to move to live trading as quick as I can. Because the thing is, it stops you focusing on trading because you're too busy learning the platform.
Great.
And that first experience just spun my head around, really. And
so let's think about that. When you're starting with a new broker, you're almost by definition going back in skill.
Absolutely.
So it's important to keep that in mind and temper your expectations about what you can do and what you can't do. Can you jump in and do 6 hours with a new broker? No chance in the world.
Yeah, I wasn't able
to.
No
chance in the world, man. It's got to be very diligent. You know, you've got to be very diligent about not overstressing yourself mentally, about hotkeys and macros, and anything you can do to semi-automate the process is time well spent.
Yeah, because I had, my process was pretty a slick process, and I was comfortable with the hammers and the shooting stars, all of it really. And then, as you say, when you're looking at another platform, it's kind of like where you do go backwards and you're starting again, and it messes up your system. So I missed a couple of trades because it was too slow, but I'm happier now because I've made the decision. I've deposited funds, and so next week I will carry on with the demo to make sure I'm completely comfortable with the platform, and then after that start trading with real money.
Wow.
Yeah, small amounts, but to start with. Yeah. But yeah, well, I mean, like, so do you? I mean, I know you pay about $2, and this is 7.
I pay 2 in, 2 out.
Okay, so 4.
Yeah, and it works out a bit more than that. Actually.
So, do you have to manage the spread, or do you?
No, Interactive Brokers doesn't work that way. It works like a real market. They don't. They charge their fees for. They charge their fees for the fees, and they don't try and build it into the spread, which is what I prefer, and it's what I've always done. So, retail brokers tend to blend their fees into the spread because it makes it really difficult to work out how much they're charging you.
Absolutely, yeah. So this is ECN, and I think it's a 0 spread most of the time. It might go to 0.1, but generally a 0. So it looks pretty good. I quite like the CTrader. That's quite a nice setup. You can.
CTrader is built by Linda Rashke's husband.
Really?
Yeah, it's his company.
Yeah, so it's good. I've got
a lot to do with it, and yeah, I watched her trade it for a long time.
So it's been a week of highs and lows, but yeah, I mean, I've made my decision. I'm happy with with the way it looks. I've just got to make it work now. Which is,
it sounds like there's some anxiety and about that whole process. Just
the thing is, Scott, I mean, most of the time in my trading career, I traded stocks and indices, and whenever I traded indices, I would start. I went from 6K to 8.5, and then down to 2.5. Most of the time, I've ended up losing money. So logically, I believe in the system. All of the data is there. It's not anything that's logical. It's an emotional concern.
So what we have here is a classic case of touch the stove. And conventional wisdom about trading is that you have to do all these beginner mistake type things. It's a rite of passage. Everyone has to blow up an account. I blew up 6 accounts, right? That's not true. All that happens when you touch the stove is you get fucking scar tissue, and that scar tissue becomes terrifying. Like don't make me fucking touch the stove again. And what you're experiencing is an echo of an older time. And and I just want you to realize that you're not the same trader who was trading discretionary indexes without a system, who would allow a trade to go from 8K down to 2K. Like that's not you anymore. That couldn't happen. It wouldn't happen. It's a different guy. It's a lower skill guy, and you're a higher skill guy now. I think you'd rather die than walk away from the screen with a trade with no stop, right?
Totally.
Never happened. Not in a million years.
Nope.
So what we have is an irrational, self-centered fear that's based on previous trauma.
Yeah, absolutely. Yeah, you're quite right. So it's
you're afraid. You saw a snake when you're a kid, and now you're terrified of snakes. Your dog bit you, and now you can't stand dogs. But that's not the case. And your job in this process is to be the adult and kind of self-care yourself through this. And just talk. The way I do it, I talk to myself like I'm about 5 years old and go, okay, Scott, like I know this is scary. Like I know a new broker is scary. I know it's getting real now. Like we spent 3 months preparing, but now, money talks, bullshit runs a marathon. We got to do it for real. But that's okay because we have the skills now. I just talk to myself like I'm a little kid. Like it's okay. You're not that same loser trader that blew up those accounts. You're good now. You're good. Honestly, you're good. And from my point of view, looking at you, you are an expert trader. I have absolutely no trouble calling you an expert.
That's very kind of you. I would say I'm on the journey.
I think you're an expert. Honestly, I met a lot of traders, and I met a lot of traders who thought they were good and weren't, and you're good. You're fucking good, man.
Yeah, well, it's the system. If the system's bloody brilliant.
The system's an edge, but all systems should be an edge. Like if your system's not an edge, you got no business fucking trading it, right? Like so the fact that the system's an edge should be no great thing. It's not common in the retail world. Like you wouldn't find anyone in the hedge fund world like going into their boss in the morning and going, oh yeah, boss, our system, well, it's completely not an edge at all, and it's just made up bullshit, fucking nonsense. And we keep trading it, like you're just going to get fired. Like your system has to be an edge. And in everywhere in the world that trading is done seriously, all systems are an edge, except the bullshit that gets foisted on retail traders. So it's not this amazing thing that I somehow have a system with an edge. Like all systems should be an edge.
Yeah. But that discussion you had with Tony DeQuick, I mean, yeah, again, your head spins as well with the possibilities.
Yeah, for algo traders, trading a subset of the system is far more appealing, far more appealing, because there's chunks of it that just shine like diamonds, and there's chunks of it that suck. But the problem for us trading it manually is if you take out too many chunks, it gets boring, and then you miss the good bits.
Yeah, that's hard. It's harder work then, actually, isn't it?
It's harder work, yeah. So from my point of view, as a manual trader, it's very different than as an auto trader. As an auto trader, you should have no trouble cutting out big chunks, trading extra markets, tweaking the times, doing equity curve magic. Like there's all kinds of, like he's got an enormous potential with his shit.
Yeah. So yeah, that's my week, and next week more focus.
Good man.
Brilliant. Thank you very much, Scott.
Who's next?
Scott, can I just interrupt for Julie?
Sure.
with C Trader, because I'm on IC Market, C Trader, I like the platform, but I went back to MT5 mainly because the ATR just never matched what I saw on TradingView.
Can you get a third-party ATR indicator?
I struggled with C Trader and third party, so I gave up.
Okay. If you like C-Trader, I would probably consider just programming your own or paying someone off the forums $50 to do it. I wouldn't have thought it'd be difficult. Like ATR is a very simple calculation. I could even do it. So
but that's it's a good spot there. I'm going to see how I get on. Cheers, Stephen. Thank you.
Yeah, with the standard one, if you set the range, set it to 27 periods rather than 40, and it gets a lot closer to the actual Wilder ATR.
So 27 rather than 40.
14.
14.
So 14.
I see what it's. I get what it's doing. Yeah.
It's still not exactly what the same, I suppose, as TradingView, but it's pretty close.
I would program it, honestly.
Well, generally, what I had in mind, and please let me know if this is not the right thing, is to actually use TradingView for everything and just place the order with C-Trader.
There's one potential problem that you can get where it doesn't happen very often, but like let's say you've got a 3.5 pip range on TradingView, that could be a 4 pip range on C-Trader. So it doesn't happen very often, and usually, and I don't readjust. I'm not that fussy, but it does happen every now and again.
I must admit, I've found the IC Market feed to be pretty consistent with the TradingView. Very rarely do I get much differential.
Because I mean, in the short time I've been using it, Stephen, that's exactly what I've found in terms of because I'm, placing the trades. Obviously, it's the demo account, so it's not entirely real, but that's what I found. But I didn't notice anything about the ATR, so it's interesting you say that. So I'll keep an eye on that. Thank you.
The difference between ATRs is some of them use smoothing, like it's like a moving average on the ATR. So you've got to find a way to take that moving average off the ATR. That's basically what it is. So they call it different smoothing things, but it's essentially a moving average on ATR.
Yeah, I didn't notice it till we're doing a trading on a Tuesday night, and I was popping in and out of DB more often than TradingView was. So that's when I started looking at it.
Okay. All right. Thank you very much. Cheers, guys. Thank you.
Awesome. Thanks, Julian. Who's left? Michael.
Oh, I can jump in, Scott, if Michael.
Oh, yeah, please, Andy.
Not ready? You sound like you got a cold.
No, just a bit dopey, actually. I've
Bit sinusy.
Yeah, a bit sinusy today. Yeah.
Oh, that's cool. I sympathise with what Julian's going through. I was going through that a few months back myself, just trying to find a system that was going to complement what I was doing. And, I tried to use FXCM and TradingView and was doing all the demos. And it wasn't until I just settled in on my Ninja Trader and going through Dorman and trading the 6E and abandoning interactive brokers just purely because of,
The interactive brokers software sucks, man.
Yeah, it's just really difficult. And once I was able to just hone in on that and the ATMs, I just love my Ninja ATMs and just, you set and forget. The easiest part about the system now is when I'm in a trade, that's the time to have a rest and walk away. Yeah. I have my earbuds and I go away from the screen and, she either tells me whether the stop's filled or the target's filled. And that's when I go back to the screen, so, yeah, it's been, I've fallen in love with Ninja, as I've said a couple of times. So, Julian, he'll get there.
I'm also
and once you do, it's in the rear view and away you go.
Well, thanks very much, Anthony.
I'm a big fan of Ninja for exactly that reason too. The rest of the software sucks. Like Ninja looks like something straight out of the 90s, but that aspect of it is for all kinds of systems, especially daily chart systems. When you're following like 30 different markets, is like really cool, because you can just leave those ATM strategies going, and they move stops to break even, and they put in trailing stops when you get to 3R, and like it's just really good.
Yeah. Yep. For me, and I think the other thing, touching on what Julian said as well, like last week, I actually had a little run early in the week where I had 6 losers in a row. And you go through that emotional, that, oh, for fuck's sake, what's going on? What am I doing? Do I want to take the next one? But when I sort of take a step back in a helicopter sense, I've been trading it live for 15 weeks now, and about 120 winners and 88 losers, and I'm 53R up. And I've had 2-3 losing weeks, I think, out of the 15. So you can have that sequence of losses, but it's just that confidence in the statistics that just keeps you going back.
One thing that it helps me to understand is that systems that aren't very good don't cluster wins and losses as much as systems that are good. The better your system is, the bigger the string of losers in a row you're going to have. And so, and it's counterintuitive, because people think, oh, if this system is great, it should never have a series of 10 losing trades in a row, right? But this system will absolutely, it never has yet, but it will paint 10 losers in a row. And the better your system is, the more, and the reason for that is the better your system is, the more closely it's matched with market type. Like if we get a sideways high volatility market, those trades are working at 75% win rate all day.
Yeah. Sideways low volatility, sucks
terrible.
Ass.
Sucks ass.
Sideways high volatility, like
amazing,
beautiful.
And so the biggest differentiator about the system performance is what market type we're in and how closely we're matched with it. So by definition, market types don't come and go straight away. If we're maximizing the sideways high volatility phase of things, making hay while the sun shines, we're also going to take significant punches in the face in the sideways low volatility zone. Maybe not as bad, but we're still going to get punched in the face.
Yep. Well, I've expanded my little trade window by half an hour, because I've noticed I heard you talking with Tony. I've got about 15 minutes of that video to go. But I'd be happy to have a chat to him about the futures and 6E if he wanted to pick my brain about that. I heard you.
I'm going to hook you up, and also Thomas, the French guy, was on here with us for the last couple of months. I think there's a lot of beneficial stuff to be discussed between you guys, and I think 6E is the way forward for him. And the reason
I've got my 6E baseline goes through to 11 a.m. and my personal trade window is 7 a.m. to 10:30 a.m. US time, which is 11 p.m. in Melbourne at the moment to the 2:30, but it suits me really well. So
my feeling about algo traders is that I can never 100% trust that FX data is something that I can actually trade off. Like, it's most of the time it's pretty close, but I can never say with 100% accuracy that if I saw that on a chart in a baseline, that I could actually get positioned on that trade. Whereas with futures, everyone gets the same data feed, right? So I can absolutely say if that was on the data feed and someone got a fill there, then I had to have got a fill there, and I can definitely say that I'm on that trade. So for me, for algo traders, futures is a better proposition.
Yep. So yeah, for me, all up, and I'm noticing I haven't quite pulled the trigger yet, and I don't know why. I probably need to do a little bit more research on it. But even there's a super high percentage of my Bollinger trades that reach a 1.2 target. So I'm looking to expand that to 1.2 and just squeeze a little bit of juice out of each one of those. But I just want to go back and I've got a sizable baseline now on my 6E trade. So I just want to make sure that I'm not making an ass of myself before I do that.
I suspect you're going to find it's a nothing burger. I think you're going to find that it probably costs you 1 in 20 winning trades that might be that become a loser, and I think you're going to find very little difference.
Mm.
I think there's better ways to squeak a little bit of performance, probably around throwing away, which I'm working on now. I just haven't had the time. Throwing away low R value trades that aren't minimum viable R trades. I'd probably throw away the 3.5 and the 4 pips. And I think
Right. Yeah. Well, I've got my deal with Dorman and Ninja. I'm paying $4.72 per contract round trip. Yeah. So on a week where I have like a
472 Aussie or 472 US?
US.
Okay.
USD. So, on a week where I have like a 50% win rate, then and a few minimum viable R losses, then the comms, grab me on the left knacker and squeeze a bit tight. But if I have a plus 60% win rate week and the bulk of those are sort of 5 target or higher, then the comms is not so impactful, if that makes sense.
Agree 100%.
Yeah. So, it's going to I am interested in that, the minimum buy. Like last week out of that run of 6 losers, and I'm only referring to that minus 2.5, minus 2.5, minus 4, minus 3, minus 4. So they're all sort of higher contract quantities, which meant that, they had a bit of a double whammy on me from a dollar perspective. But
I find I don't begrudge the comms when I'm winning, but when I'm losing, it becomes quite hateful to me.
It's a cost of doing business, no question. But it's like anything in business, you've got to try find the best way to manage it.
And I guess part of that is being competent at business. Like if you look at guys who in the real world who are good at business, they don't just like go and gold plate their offices, and they don't waste a bunch of money on expenses they don't need, and they run their business like a business.
Yeah, correct. So all up, feeling good about the world and making steady progress.
Yeah, so you want me to hook you up with Tony?
Yeah, sure. Yeah, happy to have a chat with him and give him a copy of my 6E database baseline. Absolutely.
I'm sure he'd appreciate that, and I think that's the way to go for him.
Sure.
All right, Michael, you got your mic working, bro?
Hello.
Hey, Michael.
I'm just observing, Scott.
How was your week? How was your trading week? What can we help with?
I've been away from the trading systems this week.
Gotcha.
But yeah, my idea is just to observe for the first few months.
Okay. Yeah, makes sense. Just one thing I'll say about delaying action is that keeping a baseline yourself is really time well spent. It's kind of a cunty job, but it's time well spent.
Yep.
Cool. Okay, guys. Well, this is a really great session, actually. Really great session. Happy you're all here.
Scott, just a quick one, please, if you don't mind, mate. I just want to confirm the 3 different types of trades is my understanding. We've got retest variations with increasing volatility. We've got retest concepts with increasing volatility.
Technically, no. So I'd like you to use more precise language. Retest variations not in decreasing volatility is not the same as increasing volatility. Not in decreasing. So we've got retest variations not in decreasing vola. Retest concepts not in decreasing vola.
Yep.
We can have retest variations and retest concepts in decreasing vola, but in the direction of the trend. So you can see my screen. If we're in decreasing vola here, which I don't know if we are, this would still be a retest variation long that we would take even in decreasing vola. You'd still take retest variation trades in the direction of the trend. And the third type is in decreasing vola. hammers and shooting stars that touch the at least one of the EMAs.
Yep, gotcha. And then thirdly is the hammer and shooting stars tapping the 8 and 21 day moving averages.
Yeah, the 8 and 21 period, not day per year. Yep.
But
So
they
they
have to touch. Yep.
They have to touch, or more rarely it could happen that they don't touch either, but they're like sitting in between it, not touching anything. It's a very rare situation, but that can happen. It happens on daily charts sometimes, but not so much on 2 minute.
Scott, can I just say something quickly there for Ben?
Sure.
Ben, I started doing the Scott stuff when he did his 4-day Facebook presentation back in May, I think it was, Scott. And that was after he'd spent substantial time developing the system and also live trading it and had his baseline. And I found those 4 days worth of videos were a lot clearer. And that's not to say that the training videos aren't good, but those 4 days were better. And they're in your thingo. They're in the course fairly well down the bottom. I think there's something like 15 videos all up because you did a Europe session and a US session and what have you. But if you just go to the those and watch those, they kind of go for about 2 hours each. I find those excellent training tool.
Yeah, I'd agree with that. I was much better by the time I did those, and it was like I was settled into a good routine there, and I didn't suck anymore. And yeah.
I think I'm watching those. I think they're in that prison paycheck system, and that was part of a masterclass, I believe you were delivering.
Yeah.
I believe that I'm watching those. I'm just trying to pick notes out of it, whilst I'm listening to them and assembling it all. And just the last one for confirming evidence, like you've got here, like walking up the Bollinger Band is confirming evidence, but that would only be confirming evidence if it was like you were saying before, like an RTV trade that is a trend trade.
No, it can be. There's no restriction on it, so it's confirming evidence for. So walking up the outside of walking up the top Bollinger Band is long confirming evidence. Period. You don't have to. You don't have to break it down, and it can be for this, it can be that. You're just going to confuse yourself. It's like once we have a close outside the Bollinger Band, we have confirming evidence for a long. And it's entirely possible, doesn't happen very often, that you can have, for example, here we close on this 5 minute, we close outside the Bollinger, and we're still walking upside the Bollinger here. That could easily touch the lower Bollinger on a 2 minute chart. Could easily happen. So don't get yourself tied into this has to be for that and that has to be for that. That's an overcomplication.
Well, because you just mentioned that's for a long, so because it appears that the RTVs are mainly mean reversion and
mainly, but there's nothing in. So I want you to read the rules literally. So I don't want you to. You seem to be wanting to like put a bunch of extra stuff into your rules that aren't there. The rule is you need one of the 4 types of confirming evidence on the 5 minute, and you need at least one of the 4 types of confirming evidence on the 10 minute, and that's it. There's nothing else other than that. And most of the time it does happen the way that you think it happens, but there's nothing in the rules that says it has to be that way.
Yeah, man.
Like it could be some weird shit, right? Like weird shit happens.
I'm just trying to understand the logic of it because, it's a mean reversion system, but then you're saying we're waiting for something to go up the Bollinger Band, which indicates.
So the logic of it is that if we look at this 2 minute chart, it's just really, it's most of the time 2 minute charts are a choppy mess. And 2 minute charts have inherent problems. If we look at the smallest candle on that screen and we look at the biggest candle on that screen, this one is like 5 times as big as that. That's simply, if we compare to say a daily chart, that situation doesn't happen nearly the same way. Like you get bigger candles and smaller candles, but you don't get that extreme sort of thing. So what we're looking for is to just tilt the odds of the 2-minute charts a little bit in our favor. So if we take this same setup with no the RTV on the daily charts with no confirming evidence, no high and tight, no nothing, it works about 62%. So these are far more reliable on the daily chart. So what we're doing with confirming evidence is we're tweaking the 2-minute chart, which is inherently a bag of shit, into something that's just about ready for prime time. So RTVs on the daily chart off the Bollinger, they work about 62% of the time. RTVs with no confirming evidence and no on the 2-minute chart alone work about 53, 54% of the time, and it's just not good enough. It's not good enough for prime time. Make sense?
Yep. And because it just sounded a bit counterintuitive that you want to take a mean reversion trade when the 5-minute is telling you it's walking up the Bollinger Band.
Okay, so conceptually, it's possible, it just doesn't happen very often. It absolutely can happen, and the situation that causes it to happen is this one here. So if we consider we start walking up the Bollinger Band here it starts at 540, ends at 550. Still walking up the Bollinger Band. This, by the time it gets all the way down here, we're still walking up the Bollinger Band because it doesn't stop until the close of that bar. So it's this situation that can cause weirdness.
Scott, I think a good observation too is that just because it's a retest concept or a retest variation doesn't necessarily mean that it's exclusively a mean reversion trade.
Very good observation.
And a retest variation can be a great setup for a trend following trade.
So I think that's a really good point, and I think what I want you to understand is that a Bollinger touch confirming evidence is fundamentally different than a trending confirming evidence. A trending confirming evidence is buying somewhere here and trading along the direction of the dominant trend. That is a very different situation than selling here hoping for a quick bang down short. And you can see if we were selling at the upper Bollinger, we'd only have a short target. Selling into the upper Bollinger, have a short target. Whereas if we're buying somewhere here, we can go for a bigger target. And so why is the system consistent? Why doesn't it have periods of real super performance? And then why doesn't it shit the bed? The system is consistent because we have a roughly 50-50 blend of trend following and mean reversion. So whatever we get, it doesn't always work out that way, but it's not terrible, right? So Bollinger is true mean reversion. Bollinger trending and trending are technically they're trend following setups. And so when you add up the amount of Bollinger trending, and then add that to the shooting stars and hammers, you get a roughly 50-50 blend. And that's what we're going for. That's what we're really trying to engineer is a 50-50 blend so that we don't have to really, so that our performance today doesn't depend on did we get the market type right? Are we lucky? We want to take luck out of the equation as far as possible.
The logic is that basically the market's overextended if you get an RTV mean reversion and it's walking up the Bollinger on the 5 or the 10.
Correct. But, this setup here could easily be, it's not, but, okay, so this setup here, it's not high and tight, but let's say it was. So entering here, we've got a touch of the lower Bollinger on 5, but on the 10, we're still trending up. Is this setup a setup you could go for 2R? Absolutely. It made, 3 or 4R, but all the way up here. Yeah, so it's just a fundamentally different thing.
You could also get an RTV short there whilst it's trending up. You can
get an RTV short, but it's not. But okay, so let's say you get an RTV short right here.
Yep.
you're going to go for 2R here? Is that a good trade? I don't think it is. Quick bang is all you're ever going to get with a true mean reversion, like a Bollinger touch on the 5, Bollinger touch on the 10. All you're ever going to get is just a quick bounce down, hit the target, and then reverse. That's all you can count on.
Great, thanks for that.
Yeah, that's it. All right, guys. Great session. I'll put this online in the group, and I'll see you on Tuesday, guys.
Enjoyed that. Thanks,
Okay.
Scott. Thanks,
Scott.
everyone. Cheers.
All right. Good work, guys.